Hi, and welcome back again to Tim Biggam's Options and Volatility Newsletter. We'll take a look at the overall market post-Fed rate decision, post-big tech earnings, as the S&P and even the Nasdaq now make runs at fresh new all-time highs. So let's jump in and take a look, shall we? First of all, here is the S&P 500. You can see just hovering right below that all-time closing high of 61,1871. Only need a little bit further to go. We're basically right at 6,100, still maintaining that trend line we've been talking about for really a year and a half, with just a couple dips below it here. So certainly has been a nice rally, to say the least, back above the 20-day moving average, which even held on that nasty start to the week. Remember Monday with the massive sell-off as DeepSeek kind of put a staunch in the rally, have recovered really all of that drop, and we look maybe to break out to fresh new all-time highs here, as the Fed kind of hinted at maybe a little more dovish, maybe a few more or one more rate cut in the cards. 10-year yield back towards 4.5% instead of 4.75. So longer-term rates heading lower as well should be interesting. As far as the VIX, we're seeing that hover right around the recent lows here, right around that 15 level. You can see just going back a short period of time to the beginning of the year here. We are nearing the yearly kind of lows here. We'll see if it closes with that elusive 14 handle or not. Regardless, options getting a lot cheaper on Monday during the DeepSeek sell-off, we'll call it. We saw the VIX briefly above 22 intraday, now heading back towards 15. We'll see if it closes with 14 handle to start the week next week at some time. As far as unusual option activity, interesting enough, seeing some in NVIDIA, and certainly some option activity. NVIDIA, at an interesting point, has gotten to oversold levels, as that felt the biggest brunt of the DeepSeek sort of malaise here. Certainly Bollinger percent B, MACD, RSI below the 20-day moving average, middle of this trading range. So for those who want to maybe position longer term for NVIDIA, and I very much might come out with this in the Cobra, looking to sell out of the money put spreads, the 195 put spreads, simply because, as we can see, implied volatility here at basically the highest level since Volmageddon Part 2, right? We do have earnings coming up in NVIDIA, but I don't think those will have certainly as much of an effect now, given the sell-off we've seen. So that's kind of what we're looking at. Should be interesting times here. And we're seeing Apple, which came out with earnings that were kind of somewhat lackluster, but they're liking the services margins. Apple making a move back towards its all-time high here. And if you remember our trade where we did kind of the pairs trade, getting long Apple here via a put spread, and then getting short the triple Qs via a long put spread, right? Selling a bullish put spread here in Apple, buying a bearish put spread in the Qs. We closed that out a couple days later as the Qs got hammered on Monday. Apple was actually up on the day. Took that trade off for a very nice gain. I certainly can see that in our trade walkthrough. So until next time, as always, here's the good trading.